Good afternoon and welcome to today's webinar from East Capital Group. I'm glad to have with me Peter van Berlekom, CIO of Espiria, as well as Stefan Pari, Portfolio Manager for our Espiria Nordic Corporate Bond Fund, which will be the focus of today's discussion. If you have any questions, I would also like to remind you that you will be able to ask questions in the top right-hand corner of your screen, and we'll do our best to answer those as best we can. So over the past couple of years, of course, fixed income investing has seen a renaissance as a result of increasing interest rates, and on the back of this increased demand, as well as based on our many years of experience managing fixed income mandates, at the end of 2022, we made the decision to launch a new fund, Espiria Nordic Corporate Bond, and we were of course thrilled to see the exceptional performance 2023 with stellar returns around 9%, as well as very strong inflows in excess of 100 million euros, which is great to see. So with that, I think we'll dive straight in and we'll discuss a lot why the Nordics has been so interesting for fixed income as well as the fund in detail. So if we kick off with you, Peter, how would you comment on 2023 and the interest we saw in the Nordics for fixed income products?
Yes, we started the year with fairly high policy rates, and which increased during the year, and very high inflation. And that was quite obvious that inflation would come down eventually, also on the basis that the year-on-year effect would be at some stage be positive. So there has been very much nervousness in the market on the general outlook for the economy. But bear in mind that Swedish companies are very stable, and it's a stable environment. So we have 3 AAA rated countries. We have underlying open markets and good fundamentals, which supports especially corporates. So this as a background, it is interesting when rates are high, companies are doing well, generally speaking. So and with high rates, high yields, it will become an interesting investment.
Great, and it's interesting that you touched there upon the stability of the Nordic region and the stable macroeconomic environment. That's something which particularly continental European investors really appreciate with the Nordics. And Stefan, I wanted to sort of continue on that angle with my next question for you. What would you say really are the key factors which distinguish the Nordic region from other regions of Europe?
I would say, apart from what Peter was alluding to with very stable countries here, we have 3 AAA rated countries out of 9 in total in the whole world. You also have floating rate notes that are prevalent, which means that the coupon is set every 4 months, and you would change the coupon rather than have a coupon set at the time of the issuance, which means that the interest rate risk is very, very low, and that has been a key selling point for us.
Right. So 3 out of 9 AAA rated countries, you said. That's quite fascinating, as well as the floating rate note structure, which I believe also, as you said, is quite unique to the Nordics, correct?
Yes. Yeah. So you have it, but not at all at the same extent in Europe or in US. And if you need to decrease the interest rate risk, you normally do that by using derivatives, which can be fairly expensive in the US and continental Europe. And here we have it basically for free.
Okay. And continuing on the Nordic angle, then, I know there's certain other elements which are important to consider as well when evaluating the Nordics as a region, not least the credit spreads and the difference towards the EU and the US as well.
Yes, so if you look at the picture here, you can see the Nordic spread compared to the US and European credit spread, and you would have a comparable credit quality in the Nordic and the US and Europe, but you would actually have an excess spread. And at the moment, this spread is above the average. So if we would just go back to an average spread measured against continental Europe or US, you would gain an extra return of around 1.2 to 1.8%. And so that's a cushion you have if you invest in the Nordic region at the moment. Then you would have this low political risk here compared to many other countries. You have a high saving rate. You have automatic stabilizers, meaning that if you're unemployed, you would still get funds or a kind of a salary from the state for a long time. And then you have a strong banking system. And the kind of company issuing bonds in the Nordics are a little bit different, or they do it in a different way compared to their European equivalents or in the US, because normally they use the capital market in order to increase the return on equity rather than a necessity. So many of those companies that are in the capital market, they also have potential funding from banks. And that's a big difference.
And just going back to this picture here, are there any particular reasons that one should remember as to why the spread premium is so much higher in the Nordics?
No, but in general, it is higher. And one of the reasons for why it is higher is there is a lot of the companies that are smaller compared to European or US companies. And the issue size in general is a little bit smaller, and you have different currency as well. And that means that kind of asset manager that are currently in this market is compared to larger European and US asset manager also smaller. So it's possible to generate a higher return just by accessing this market, but you can't be too large.
Okay, very helpful. Thank you, Stefan. If we then take the crystal ball and look into 2024, Peter, how do you view the outlook for the year ahead in terms of fixed income?
I believe that companies are adjusting to a low growth scenario, and it's very much self-help to keep profits on a reasonable level. And what we look at is really cash flow in these companies, large as well as small or mid-sized companies, to and just protect their margins. And when doing so, you can really benefit in this environment from investing in those companies. There is a stress in the system. There are high spreads, but with a good certainty and a sort of good research and analysis, I think we will be able to find these good investments in specific sectors. Not all sectors are interesting. I think that Stefan will come back on that. And then, of course, short rates will come down eventually. The long end is already at a low level, so don't expect too much there.
So important to be selective and stick to active management then?
I think always quality is a sort of a golden word to bear in mind when investing.
Yeah, great. On that, Stefan, then, with this macro environment and outlook in mind, how does this play into your portfolio construction for the year ahead?
Yeah, so the visibility is a little bit more murky than it has been if we rewind the time a couple of years. So in general, we have been more selective when it comes to entering more risky bets. So we have a pretty safe portfolio compared to what we expect when the market is more transparent and we have a better visibility. With that said, we have a flexibility. So if we look at last year, for instance, you can see that in the picture to the left, the interest rate duration, we were increasing that, and that is also something that we have decreasing at the moment, so we're going back to around 1 year. And one of the reasons for that is obviously, if you look at the right picture, the swap rates where the credits are priced against, then you would see that the 5-year point, for instance, has gone down to around 2.4%, and in the STIBOR 3 months that is used to price the floating rate notes, that's still up around 4%. So what we have seen by actually decreasing the interest rate risk is getting a yield that is higher, and that is certainly something that is very, very interesting for this year at least. And like Peter was saying, we are not investing in certain sectors at all, like shipping, and we are careful when we invest in real estate companies. We don't in general invest in developers at all. But we do invest in insurance companies and banks, for instance, that we think are looking fairly cheap, both in relative terms, but also in absolute terms. And what we can see also is that the bankruptcy that didn't happen last year, we still expect the bankruptcy to increase this year. So we are a little bit cautious when it comes to investing in the higher risk category when it comes to high yield.
Okay, and important to also mention with this particular fund is that it's a crossover fund with the ability to invest across both investment grade but also the high yield segments. And am I right in saying that we currently have a higher allocation to investment grade and are still relatively defensively positioned in the portfolio?
Yes, I would say that's true, and we are assessing all the issuers and bonds, both using Standard & Poor's, Moody's and Fitch or a local rating agency, but we also assess them ourselves to get an opinion on where we see the risk and where we want to be.
And I want to also touch a bit again on the real estate sector for Sweden and the Nordics. I believe in terms of total bond issuance, the real estate sector is somewhere between 30 and 40% of the total volume. If we look at our fund, how much of the real estate would you say is in our fund?
Yeah, so we do have an exposure to real estate, and it's around 10% currently. And the reason for why we have a 10% exposure is that some of the larger, more stronger players with good owners and good connections with the banks have seen their spreads widen just because they are part of a sector that isn't performing currently. So what we have been doing is actually buying the stronger bonds in a weak sector. Okay,
so focus again on quality, as Peter said. Any examples of real estate companies you would like to highlight?
Akelius, Castellum, for instance.
Yeah, Akelius and Castellum. Okay, so real estate is a sector where we're very selective and sort of underweight compared to the index, whereas financials and insurance companies are sectors we like.
Yes, and I think that is something that differs. If you look at our fund and the competitors' fund, we have more financials in general in our fund.
Okay. Good. And as I mentioned, with the strong year of 2023 behind us, what can we expect in terms of return now for 2024 in the fund?
I think if we look at the picture again on the swap rate, we can actually see that swap rate, the shorter end, has actually gone up this year compared to how it looked at the beginning of last year. And you can see that on the right slide, and the gray compared to the black dotted lines. And the credit spreads are at a comparable level compared to last year. So I could expect a performance similar to the one we saw last year. That would be my best guess.
Good. So basically an equity-like return to a very low risk.
Hopefully, yes.
Yeah, that's the plan.
Yeah.
Fingers crossed. Peter, if we welcome you back then to conclude, if you would have to highlight 3 key reasons why Nordic Corporate Bond should be part of an institutional portfolio for 2024, what would those be?
Yeah, but just starting with, we've seen in the last year plenty of opportunities of companies issuing debt. So a constant flow is really to cherry pick those good companies and benefit from the higher credit spreads. So that's actually the first one. And then of course, as Stefan mentioned, the special character of the Swedish market with these floating rate notes, which is a fairly large part. You really have the yield pickup in those investments. And then we would expect a fairly stable development during the year. As last year, we had only one short hiccup in March last year with the sort of banking crisis, which faded quite quickly. So that's what we hope for, 7+%, and hopefully in a fairly straight line.
Good. So thank you so much to both of you for sharing your insights and expertise with us today. I hope it's been useful for you as well. And I think we can say that 2023 was a really strong year for fixed income and for the Nordic Corporate Bond Fund in particular. And as we mentioned, we see very good opportunities as well for the year ahead. So with that, I'd like to thank you for watching. If you have any questions, please don't hesitate to reach out to either myself or one of my colleagues, and we'll make sure to help as best we can. Thanks, and have a continued great afternoon.